Welcome to this video day. It's the 30th of March. It's Saturday. Just going to be looking at a Forex pair today, which is USD MXN. We'll be going to the charts in a moment. We looked at it in a video last week and was saying in terms of the risk to reward, it's our favourite pair. Now, in terms of the USD, it has moved up quite nicely. There is far more upside to come. For us, this is probably the trade setup we're always looking out for, no matter what pair it's in. Now, in terms of just for new viewers, when we do our technical analysis, we are going to be keeping it very simple. The way we are going to keep it simple is we're going to filter the chart with our favourite tool in Forex, the COT, the Commitment of Traders Report. If you are unfamiliar with this tool, it's totally free and gives you what smart money is doing in the markets in terms of actual positions, not opinions. And what we have in this pair is the smart money commercials heavily long, speculators heavily short, which points to far more USD upside longer term. Now, what we are going to do is we are going to go and look at the trade setup. Please do keep in mind, it is my view. As of right now, it can change in line with the market conditions. If you want all our trading techniques and our daily technical and sentiment analysis of 14 major Forex pairs, including the one we're going to look at right now, you can click on the link beneath this video and get live access to our member center. Right, let's take a look at the charts.
Right, we're just on the COT net traders positions first before I draw my technical levels of entry, stop and target. Now, in terms of this chart, just for new viewers, it is foreign currency first on the COT. We, of course, trade USD MXN, so I'll put the chart the right way round in a moment. We're only looking at this chart to see what two key groups are doing. The commercials in red, the smart money hedgers, and the large speculators in green. We're not interested in small speculators. They're totally irrelevant. We just want to know what the big money's doing. And we're looking for big divergences between the groups, and we'll go with the commercials. Now, I've highlighted three setups here, A, B, C. We look at A, specs heavily long, commercials heavily short. Look at that for a full. Beautiful move, right? B, not such a big divergence, but again, a decent fall. Check out C. It's the biggest divergence between specs and commercials on this chart. I think it's by far the biggest in the last 3 years. And speculators have bought again this week. Commercials have sold. You can see the MXN has already come down on the USD. And the way the divergence is, I wouldn't be surprised to see new chart lows. Now what we can do, we'll just go to the chart, put it the right way around. So it's USD MXN, draw levels of entry, stop and target. Right, from the USD MXN, chart the right way around. I'll draw my levels in a moment. Now, in terms of at the top, I put a quote, and it's one that Forex traders should keep in mind. I don't see market names. I see risk, rewards, and money. It comes from Larry Height of the Mint Fund, one of the most successful funds of all time. To say this frequently, a lot of traders just focus on a few pairs or the majors. Don't focus on the name of the chart. I know this is a more minor pair. Focus on the risk to reward and how much money you could possibly make from the trade setup. And this trade setup is, for me, the most attractive coming in to the new week. Now, in terms of the COT net trade positions, again, just before I draw my levels, why are the commercials so bullish the USD? I said it in previous videos, you can just trust the commercials, but we like to work out the reasons why they're bullish, and that gives us more confidence in the trade. Now, in terms of the points I've written down, Mexico is likely to cut interest rates going forward. We had the Mexico bank meeting this week. They're very cautious about the outlook. They'll be cutting in the coming months, which is bearish for the MXN. Point number two, the Fed were dovish at their last meeting, and they're on hold in terms of interest rate hikes. So they won't be hiking this year. And a lot of people will say, oh, that's really bearish for the USD. We took the exact opposite view. It's bullish. Why? Because they're only holding rates because of the global slow up. The global economy is slowing. So which currencies get hit hardest in a slowing global economy? It's emerging markets like Mexico, okay? Point number three, MXN is only strong due to attractive interest rate differentials, not the economy. Traders have just sold the USD, bought the MXN to get the carry on the interest. Now that will actually all end. Yeah, we've got global slow up, global economy in really big trouble. You've got too many speculators short the USD. They will abandon their positions. And if you're doing carry trades, you do not like high volatility. Volatility is starting to pick up, so I think the carry trades could exit en masse. Point number 4, MXN is the best performing currency of the USD since December, so it's very overbought. Okay, so plenty of upside on the USD in our view. Point number 5 could possibly happen. Trump is threatening to shut the border between the US and Mexico. If he does, that is bearish peso. Now, in terms of levels, just for new viewers, how we got into this trade. Big fall down. That's the Fed being dovish. And we just took it as bullish for the USD, but wanted to see an exhaustion of selling. We exhausted here and settled off the low. We'll come in the next day. This blue tail doesn't reach the red, so no more sellers. We'll just come in through this outer Bollinger Band, which is one of our favorite ways of entering trades. And there's the level we came in. And she moves up quite nicely. Now, where will we be going next? I personally think we've got a lot more upside in this pair. Let me just draw a trajectory in. There we go. If I was coming into this fresh, I'd come in through this level here, which is above 1950. Just get clear of the level, see if she runs. I wouldn't worry about these two candles here, okay? Moved up quite nicely, get above here, carry trades will exit, and I think we're going to go all the way to chart highs. Could even go further. Where would you place your stop? At the moment, I've got my stop behind this big blue candle, but if we break out, say above 1951, I'll bring it up. And there's a level that I think is a good one, which is here. And regular viewers will know why I think that's a good level, because you've got the 20-day moving average or the mid-Bollinger Band there. If we're really bullish of a currency pair and we break higher, we'll very often tuck our stop in behind the 20-day moving average, but just give it a few points back. You don't want to be right on that level. So if you look at the risk to reward of this pair, just coming in fresh, it's about, if I can just, is it about 4 to 1? 4 to 5 to 1 in terms of, if we break higher and reach the target that we've set. So for us, this pair has done really well so far for us. Nice profits, and I'm hoping we could get some more next week. Of course, we shall see. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.